like to start by welcoming you to our client engagement cocktail this evening. We've had a hiatus for 2 years, as you know, because with the COVID break and all the disruption that was caused. So we really have been chimping at the bit to try and host something. And as my senior partner said, this is our 20th anniversary, so we really do have a lot to celebrate, as well as a lot to introspect about. So we want to welcome you again. I want to take this opportunity to welcome you again, to ask that you be comfortable. We want to move on to the next stage, which is our keynote speaker. You might have seen from our invitation that our keynote speaker this evening, or our guest speaker, was Mr. Isaac Awondo, who is chairman of NCBA Bank. But Isaac has done even better by relinquishing the opportunity to speak to us and saying to us, we've got somebody even more relevant that will address the issues that we speak about this evening. So our keynote speaker is Mr. John Okullo. Mr. Okulo is the Group Director, Corporate Banking at NCBA Bank. He began his banking career in 1997 as a management trainee with corporate banking at Standard Chartered Bank. He then went on to work at Citibank Kenya between 1999 and 2002, with ultimate responsibility for delivering trade products and solutions across East Africa. From there, he worked for Barclays Bank, now ABSA, in corporate relationship management between 2003 and 2006. Prior to moving to Standard Bank Group in 2006, initially as the head of corporate banking at Stanbic Bank, and subsequently from 2008 as the head of corporate and investment banking at Stanbic Uganda. In 2011, he joined NIC Group as the founding managing director of the group's banking subsidiary in Uganda. That is NIC Bank Uganda, a business that he led until 2016, when he moved to CBA, where he was the chief commercial officer prior to the merger between NIC Bank and CBA in 2019, that formed NCBA Bank, which is currently the third largest bank in Kenya, with subsidiaries in Uganda, Tanzania, and Rwanda. Mr. Okullo's current responsibility covers the group's banking business with corporate entities, trade finance, cash management, and custodial solutions. And over the years, he has gained significant experience in developing funding solutions and risk management structures across all of the sectors of the economy. Mr. Okulo holds an MSc in economics from the University of Gdańsk, Poland. So John, I just want to welcome you. Maybe I should say that I'm glad to see John again after a long time, because our kids go to the same school, so we have a personal relationship, which is really great to be able to see you. I also want to offer apologies from Mr. Isaac Awondo, but to say that we are really, really privileged, John, for you to be here and for you to be our keynote speaker this evening. Welcome. Can I ask you to give him a hand clap and to welcome him? Thank you very much.
Thank you very much, John Ohaga. It's certainly a great pleasure for me to be here today. And I'd like to start by thanking the speakers before me, Mr. Ocheng, Mr. Onyango, Mr. Maloa, Mr. Odhiambo, and Janet Othero for the insights that you've given us about the work that TRIPLEOKLAW does and can do for its clients. To the CEOs present, business owners, managers, heads of legal, all protocols observed, distinguished guests, ladies and gentlemen, I wish you once again a very good evening. John, thank you very much for that great introduction. It's indeed an honor to be gracing your first physical customer event of this year, and certainly in the past 2 years. And for that, I would like, on behalf of the bank's chairman, to thank you for inviting him as the guest speaker for this event. At the same time, I would also like to convey his apology for not being able to attend the event due to unavoidable circumstances, which I'm sure he discussed with you, John. And whilst our group managing director, John Gashora, would have stepped in, he also had a prior engagement that could not be changed. And that then leaves me with the honors of standing in for our chairman. And it's certainly an immense pleasure to do that. And to be able to be present here at this forum that's hosted by our very strong business partner, TRIPLEOKLAW Advocates. We're speaking about disruptions and about the disruptions caused by COVID and life after COVID for business and individuals. And disruptions has been one of the most used words in the recent times. Disruptive events, however, have always happened in history. It just seems that right now so many of these events are happening, and more importantly, when they occur, business models and businesses are being permanently disrupted by events that occur in remote corners of the world due to the interconnectedness of our societies and economies. So no sooner had we begun to reconcile with the business disruption caused by COVID-19 and the need to build business resilience post this deadly pandemic, we're now faced with a new disruption as the new world order built after the fall of the Berlin Wall in November 1989 begins to rapidly dismantle. Due to the war in Ukraine, something that 2-3 months ago nobody would have imagined would have actually started, let alone lasted for this long. This has further disrupted supply chains, business relationships, and access to credit. So how then do we build business resilience in a world full of uncertainty? We move from COVID, we move into a new world order. Just a few years ago, there was the Arab Spring that was taking place. 2 years ago, Zoom was not in our lexicon, and now it's pervasive in both our work lives and also our personal gatherings. Now, what is certain is that while the pandemic exposed fault lines in our society and businesses, it also unlocked amazing possibilities and opportunities. A key outcome from this pandemic is that we all have to keep learning new skills, not just how to turn on your camera when on a Zoom call, but more importantly also to make sure that the mic is off when you're doing other things. So even the old people in this room, we have to learn new skills, but even the younger generation, it's taught us that we have to keep learning. Because at times one can get stuck in time-consuming activities by sticking to old habits. These are the new realities that we will be unpacking this evening. I think you'll all agree with me that the aftershocks of the COVID-19 pandemic continue to rock the economy and society. Last week we marked the 2nd anniversary since the pandemic struck in Kenya. This is what we now call a new normal. Having forgotten how things used to be, not entirely, but we have accepted that we can be locked down. We never thought that you could actually be locked down and told that you cannot leave your house or your neighborhood or your city or town. Travel plans can be cancelled. You can be stuck abroad in a hotel room. Supply chain challenges are now business as normal. Businesses can start and fail due to events beyond anyone's control. So what started as a global health crisis transformed into an economic and social one. One of the key learnings that we as a bank had to learn very quickly, and not that we never had it before, is extreme empathy. The need to relate to our clients in a manner that appreciates that in many instances, can't pay and won't pay goes beyond simply the inability to pay a loan or the risk of the bank having a bad loan, but it actually means that many families' livelihoods could have been destroyed. And we as professionals in the finance, legal, and accounting world really need to come up with mechanisms that will support society in weathering such storms. COVID has taught us that there can be extreme uncertainty, leading to nightmare scenario planning. In March 2020, every one of us who was running a business or employed, when we heard the news that COVID had broken out in Kenya, we all went into a panic. We all started planning, and the furthest many of our plans went was to buy a lot of toilet paper, yeah? If you recall, yeah? And then it was soap, and then it was rice, yeah? And so extreme panic hit in. But what we also learned is that, yes, we've got to plan, but we need to avoid panicking, and we need to maintain patience and persevere. What we found is that the storm that we thought was going to be with us forever or destroy us immediately ultimately passed, and we entered into a new normal. Now, even with this new normal, according to the IFC, in the last 2 years since COVID-19 hit us, 21% of businesses closed, 34% recorded a decline in customer footfall, while 69% of businesses recorded a decrease in turnover during that period. Thankfully, the banking sector, and many of my colleagues are here, stepped in its own small way and assisted businesses to restructure. 93% of business loans were actually restructured in this market. At NCBA, we also did our part. We offered moratorium on principal and interest. We waived mobile money transfer fees, as many banks did. There was a lot of guidance that came from the central bank. We proactively engaged customers at risk to identify solutions that will push them through the challenges. We enhanced digital servicing, and we actually restructured about 78 billion shillings of loans. Now, these measures led to 3 different scenarios. Some of these measures kept businesses afloat, giving them the bandwidth to redefine their business models and ultimately build resilience in a COVID-19 era. Other businesses, and I'm sure Janet Othero will testify, in the telecommunications, media, and the other T, did extremely well due to the opportunities provided by COVID-19. Businesses that had prepared their online capabilities, healthcare suppliers, computer sellers, we even found that hardware stores did very well because suddenly everybody wanted to improve their house in the village. And people were buying mabati and all sorts of ceramics. But one thing that all these businesses had in common is that they were prepared. They built capacity to compete effectively, invested in new ways of doing business, not in anticipation of a crisis, because nobody knew that COVID was on its way, but with the aim of being the best in their own chosen field. So those who have weathered this storm are those who prepared, not for a crisis, but they simply prepared to be the best at what they did. Some businesses failed because either their business models became extinct due to COVID, totally disrupted, or they didn't have enough capital to weather the storm, or they did not invest adequately to maintain competitiveness in the old normal. And so when the new normal came in, they were suddenly kicked off the pitch. So another key takeaway that we saw from our clients is we've got to keep reinvesting. And whether you're running a sole proprietorship, whether you're running a business that needs capital expenditure and technology, or you're an individual, you have to keep investing. Keep investing in your skills, keep investing in efficiencies, because you never know when you're going to need that strength. According to Keith Hansen, World Bank Kenya Country Director, Kenya's economy has shown considerable resilience to the enormous shock of the pandemic. And this year is expected to post one of the stronger growth rebounds in the region. We expect a growth rate of about 5.2%. Thanks to the diversified sources of growth and sound economic policies and management. Yes, people have different views about this, but this is a view from the World Bank. And I think the items that I can pick from this comment is, one, diversified sources of growth. It's extremely risky to be dependent on a single market if you're in business. Seek out new opportunities, even if you currently have prime customers, make sure that you're always seeking new opportunities and preferably diversify from a geographical perspective. And of course, maintain very sound management, which I guess we all do and we all take as a key requirement in business. For the lifting of containment measures, such as nightly curfew, which were in effect through most of 2021, and more economically disruptive measures such as lockdowns and travel restrictions has injected greater business growth. Furthermore, another key issue is vaccination. We've managed to vaccinate our people. The last data shows that over 18 million doses have been given, of which 8.4 million individuals are fully vaccinated. And that has allowed the economy to rebound. Savvy business people in this room know that it would be a shame to lose the technology and operational gains and fail to learn from the pandemic. Those who saw the opportunities to remodel their businesses and work processes are sure to take home the prize in the long run. Some of the shifts that we've seen that are notable, and I'll just mention 4 or 5 of them, is the digitization of commerce. For a long time, there was the view that digitization of commerce in Kenya has been overhyped. But believe me that many of us nowadays have learned to purchase their groceries and other goods online. And in fact, 84% of businesses are leveraging on business solutions and e-commerce to facilitate payments. And you need to ask yourselves whether your business is one of them. And one of the things that we've also learned is never assume or believe that your business cannot be digitized. Always remember that digitization destroys borders, and your competition is probably not in this room at this cocktail or in Nairobi. They may be sitting on the other side of the world, or they are one of these students in campus sitting in a college room coming up with new ideas to disrupt you. If you look at the solutions that have disrupted a lot of banks in terms of digital lending, they all come from offshore, and therefore they are effectively borderless. The second aspect is really smarter cash flow management. There are great businesses that we've seen that have struggled, not because their business model is wrong, but simply because they are not able to manage their cash flow correctly. And therefore, there's a need to manage business growth in line with the available sources and combination of patient capital. Business continuity planning is another aspect that we found very critical. Pre-pandemic, in fact, just to distract the team members here, is to just ask how many people have a BCP plan. Okay, a number of firms, I'm sure all firms have BCP plans, yeah? And is it correct that a lot of the BCP plans that we had was that if there is a disaster in your office, we move to another location? How effective was that during COVID? It wasn't possible. So we had to have BCP plans for our BCPs. So we have to keep working on that. The last point that I'll raise is on workforce management and culture. The challenge that COVID-19 has brought has been real. Has been real on individuals. People have lost loved ones, and a lot of individuals have questioned the value of work and the value of the lives that they live. And what we found is that money is never the answer. In motivating a workforce, yes, money is important, but in many cases, once that money has been paid, what a lot of people are thinking of is a flexible work arrangement and the appreciation of what is a good life. And therefore, the challenge that many of us have in leading our businesses is to ask ourselves, are we really listening to our team members, especially the younger ones who are coming into the market, and to ensure that our missions and visions are not just words, but are actually being practiced. I'll close with the words from John Huntsman Jr. Economic recovery must be earned. It's not something that can be given on a silver platter to anyone. Certainly governments and various organizations can step in to assist, but it must be earned, and it will be earned by entrepreneurs, and it will be earned primarily by the small businesses. Whether you're a small or large business, certainly NCBA Bank will be there to work and support you. So with those words, I'd like to thank you all for listening to me and wish you a very wonderful evening. Thank you.